Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Tuesday, April 23rd, 2013. Well, a continuation of the trend to the downside today. A candle that's made a higher high but a lower low. So in bar chart terms, this is an outside day. It does raise doubt about continuation of the trend to the downside. But when we look at the short-term dynamics, we'll understand why that's really not quite a possibility. For the previous day's trading, we saw that change of trend. The market established that with a lower high and a lower low. But a candle where the buyers were in control. Today, control has swung back to the sellers with a very, very bearish candle. A very large black body candle in terms of recent candles, and it suggests that the sellers have found some very, very strong downside momentum and is in line with some of these candles that we saw throughout the previous week, and this does suggest that this market may be destined for lower levels. The sellers have closed with control of this market, and they did lose commitment as they were testing up above the 130.79 level, a level which has been tested now for the previous 4 trading days in consecutive days, and strongly rejected from there for today's trading. This market has, however, found support down around the 129.68 level, and I did suggest yesterday that this was going to be very strong support, and we have the Kijun-sen trading around that area, and we saw the market trade exactly to the Kijun-sen and be rejected from there. So not enough for a loss of commitment by the sellers for us to be strongly concerned. But the important thing here is that the sellers have still maintained control. But this area, 129.68, a previous swing low and then a previous resistance, has been strengthened by the Kijun-sen trading around that level. If we do see a bearish breakout down below that level, then this market could very quickly trade down to 128.57 and then even beyond. But let's wait and see how the market trades tomorrow. To the upside, 130.25, previous support in the recent past, will potentially hold a strong resistance for this market. If the market does trade higher than that, then we have very, very strong resistance around the 130.79 level, with the confluence of that resistance level and also the Tenkan-sen and the top of the cloud trading around there. So very, very solid resistance overhead. Now, in terms of the Fibonacci extension, when we looked at that yesterday, we were looking to the 61.8% and then the 78.6 that coincided with the area that the Kijun-sen was trading at, and that's why another reason why we have very, very strong support around that level. Our next target, if the market does break through the 78.6%, is the 100% level, and just looking at how the market has tested to there with this rejection, the lack of strength from the buyers does suggest that there is potential for the market to trade to those lower levels and test to the 100% level at 129.27. But with the Kijun-sen trading around there, it does raise some doubt about the possibility of that happening. Now, in terms of the Fibonacci retracement, and here today we've seen the market trade through all of the very important levels. We were previously rejected from the 50% and the 61.8%. Today the sellers have found good solid momentum to close in a bearish manner down below the 61.8%, the 50%, the 78.6%, and even the 100% level. So that could be quite important. But as I've already mentioned, we did find support down at the Kijun-sen, so that is crucial to this market trading lower. The 161.8% gives us a target down at 129.22, so if the trend does continue down, we should be looking to that area as potential support and look at how the market reacts to that level. In terms of Ichimoku, some mixed signals again at the moment. Bearish bias in the long-term time frame with the market trading down below the cloud. Bullish bias just in the medium-term time frame with the market trading above the Kijun-sen, but we're only just trading up above this, so not solid bullishness in that medium-term time frame. And that Kijun-sen is flat, and price action is now being attracted in a very solid way back towards that Kijun-sen. The Kijun-sen represents equilibrium in the medium-term time frame, so we should look to it to hold a support, and there is potential for the market to bounce off there. But the market maintains bearish activity down below the Tenkan-sen, giving us a bearish market in the short-term time frame. Looking at the Chikou span, price action is now trading down below the Chikou span, so that does suggest that this market may end up trading to lower levels, and it's confirming what we're seeing in the long and fast-term time frames. And if we do see that breakout down below the Kijun Sen and the solid bearish breakout, it will confirm what the Chikou span is telling us. So really for tomorrow's trading, we do need to watch this area around 129.68. It is crucial to this market. If we see solid bearish activity down below there, then we could quickly see the market trading down to 128.57. Any attempts at a rally really will find it difficult. We have solid 130.25 level of resistance, and then around the 130.79 level we have a confluence of the Ichimoku indicators and a close by area that the market's been rejected from in the for the previous 4 consecutive days, and that will be very, very solid resistance, and it's unlikely that the market will trade up through that level.